This tutorial is brought to you by nonprofitaccountingbasics.org, a project of the Greater Washington Society of CPAs Educational Foundation.
Hi, this is Elizabeth Bess Foley, and today we're going to talk about understanding the balance sheet. We are going to focus on the balance sheet and what it can communicate, but I would like to start off with a few comments on reports as communication tools and what some broad characteristics of good reports are. Judy Blazak calls the budget the numerical expression of an organization's dreams that serves as a guide or measure of acceptable financial performance. I say that financial reports are your primary means of communicating that financial performance and its relationship to mission accomplishment and financial sustainability. So what are some characteristics of good financial reports? They provide context and clarity. They look back to prior periods. They provide narrative that explain the composition of certain balances or why things are different from the year before. They really help readers to understand what they're looking at, and they focus awareness on the right data and promote strategic discussion. Good financial reports are timely and accurate, and they help the board to understand both the current status and the future needs of the organization so that they can really make good decisions. They also serve to assure funders and the public that the funds given to the organization are being used wisely and appropriately toward accomplishing the organization's mission. Today's focus is on the statement of financial position. This is also known as the balance sheet. It reflects the overall financial picture of your organization at one particular given moment in time. And it shows the accumulated results of all the preceding years of operating. So all of the inflows and outflows over the course of the years. The balance sheet accumulates the profit and loss results from last year, from the year before, and all the years before that. A good balance sheet report focuses awareness on financial stability. It allows the board and management and funders to monitor cash balances and liquidity, to see what the receivables are and what the status of reimbursable grants might be, what the status of payables are and the level of borrowing that the organization has engaged in, the status of restricted funds. Are there any, or is there a great deal? And what the accumulated operating surplus is. Is it positive or is it negative? So let's take a look at the statement of financial position assets section. What can you learn by asking questions about your assets? Well, assets are listed in declining order of liquidity. So in other words, the most liquid assets are first. So the first thing we usually look at is cash. Do we have enough cash to pay our bills? Or is there too much cash in a non-bearing interest account? Should we think about moving it to a savings account? Are our investments diversified per our investment policy? Have we protected the restricted funds and designated funds? Are they separate from our operating funds, or can we tell by looking at our report? In terms of what people owe to us, are we collecting these funds in a timely way? Are pledges likely to be collected? And if not, do we have an allowance for those doubtful accounts? What portion of those pledges is due in the next year, or how many of them are long-term, and how does that affect our cash flow? Prepaid expenses reflect what we've invested for the future. Have we paid for that insurance policy over the next 12 months? Have we bought that print job to promote our next season's productions? Do we have an inventory? If we do we have too much on hand, or not enough? Is it old? Is it new? Do we need to replenish it? How much money are other folks holding for us in deposits? And do we know why they are doing that? What property, plant, and equipment have we invested in? And how much of it has been depleted? If the balance of the fixed assets is getting smaller and smaller and smaller, it might indicate that we need to upgrade our equipment and technology. The balance sheet can tell us, especially in the asset section, what our long-term assets are versus our short-term assets, which will help us understand what's available for working capital. Moving to the liabilities section of the statement of financial position, we see what we owe to others and what we might be holding on others' behalf. Again, liabilities are presented in declining order of their maturity, so the things that are payable soonest are listed first. That's usually the day-to-day accounts payable and the accrued expenses. What we can tell by asking questions about the payables are they being paid in a timely way? And do we have enough cash to pay our bills? How long have we had these liabilities on the books? We should pay attention to our payroll liabilities to understand whether we're meeting our tax and retirement obligations in a timely way, and how much vacation is being accrued. If it's a lot that's being accrued, we may want to take a look at a policy that determines how much vacation can be carried over. Deferred revenue are funds that have been given to us in advance for future performance of programs or services. So the balance of the deferred revenue can tell us whether we're recognizing those revenues as they're being earned. And we can ask our managers to make sure that no contributions have been included as deferred revenue, particularly restricted contributions, which no longer should go in deferred revenue. Other liabilities include the possible conditional contribution. A conditional contribution happens when a promise to give has been made, but it requires a match or that some other condition be met. So if there's a balance in conditional contributions, a board member might ask, can we in fact meet those matching funds or meet that condition? If the organization has negotiated a commercial line of credit, the balance of the principal that is owed will be shown on the balance sheet. A board member might ask, do we have the means to repay our line of credit, and are we strategically using that line of credit when we need to smooth out cash fluctuations? The liabilities section will also tell us whether we have a loan or mortgage principal owed, and it will tell us how much the organization has borrowed. It will say whether the loan is internal from the operating reserves or whether it's an external loan. And it might prompt a board member to ask, what is the plan for repaying that loan or mortgage? Again, the liabilities section will determine what portion of our liabilities are short-term versus long-term. The net asset section of the financial position really is where the rubber hits the road. This tells us after all of the things that we have or that we own or that people owe us, minus what we owe to other folks or are holding on other folks' behalf, what is left over. These are our net assets. Starting with permanently restricted, if there is a balance there, it indicates that there is an endowment, and a board member might want to know, is it growing? Are we getting continued contributions to it? Are we protecting the principal? Moving up to the less permanent restriction of temporary restrictions, have funders invested in our future? In other words, have we been promised gifts for next year because funders believe in our mission or are happy to make sure that we're going to be around next year and well funded? But if that balance is a very large portion of net assets, do we need to worry that funders are exercising undue control over how the organization spends its money? Moving into unrestricted, this is a place where we can tease apart what our unrestricted balance is. First of all, we want to know whether the net assets, the unrestricted net assets, are positive, and what is our liquidity position. How much of those unrestricted net assets are available for operations versus what's tied up in non-liquid investment in property, plant, and equipment. If too much is in non-liquid, it might be a signal that the board needs to encourage increased liquid surpluses and address a liquidity issue. And the board can do this by setting aside funds for operating reserves, emergency reserves, and other special purpose reserves. Being clear about how we present the composition of our net assets is really, really important. And I'd like to show you an example of how a balance might be misinterpreted if it's not properly shown in a balance sheet. It's key to understanding the true financial position. So this group has $100,000 in total net assets. And the question is, should the board be worried? It's a positive number. It's $100,000. Let's dig a little deeper. Looking at the composition of those net assets, we're separating them into the restricted portion versus the unrestricted portion. $60,000 of that $100,000 we see now is restricted, leaving $40,000 in unrestricted. It still looks pretty good, but remember, part of the unrestricted could be tied up in property, plant, and equipment. And in this case, it is. We see here that property, plant, and equipment represents $65,000 out of the 40. Whoa, that's created an undesignated deficit of $30,000 after accounting for the board designated portion of $5,000. So there really is an actual liquidity issue here because such a large portion of the unrestricted net assets is in non-liquid property, plant, and equipment. This really demonstrates why it's important to show what the composition of net assets, particularly unrestricted net assets, is. So what does a good balance sheet format look like that would give us this information? Unless you have a sophisticated accounting software, your balance sheet is going to be shown in a single column in the year-to-date report. I'm suggesting that you would like to have a disaggregated balance sheet that provides a much clearer understanding of what's available for operations, what's board designated, and what should be set aside as donor restricted. Using these columns requires some extra management effort, but the payoff is that a very clear understanding of the composition of assets, net assets, and liabilities is to be had. So here's a picture of a one-sheet balance sheet that I think is a good example. It fits onto one page. It uses the columns for context. It creates mini balance sheets for what's available for operations, what the board has set aside, and what the restricted balances are. And it also provides a comparison to the prior year. The notes at the bottom of the page that are keyed to the key to notes, the ABC in the key to notes column, explain what the composition or differences between last year and this year might be in narrative. This is a really high context, useful report that gives a clear sense of what this organization's assets, net assets, and liabilities comprise. Looking at the balance sheet along with the P&L provides vital data for your organization to operate successfully. If you're flying a plane, you can't just look at the gas gauge. You might have plenty of gas, but you might not be high enough to clear over that mountain, and you would never know unless you were also looking at that altimeter. So you need both to fly that plane properly and not have an unfortunate incident. Some resources that you might want to look at are on this page. Thank you for your attention.